What's going on, traders? Welcome back to my YouTube channel. And today we're going to talk about a little bit about a breakout pullback pattern, because I don't talk about that pattern that much because it is not one of my favorite setups. Because as we all know, in trading, in markets overall, the prices, most breakouts will fail and 90% of breakouts will fail. So we know the best thing is to fade the breakouts, because institutions will use these breakouts to lure in inexperienced traders. So fading the breakouts is, the winning strategy that we like to stick to. But there are a few occasions the breakout pullback and breakout pullbacks can be very effective. It can be a good pattern, but we're going to talk about it once we get to it. And today we started with the downtrend, and as we all know, the first thing as a day traders we like to do and we need to identify the current market structure. So the EMA was pointing down at this point on. EMA was holding prices below the EMA. Each time we're making lower highs, lower lows. I found the channel right here. You can see it fits from the lows, fits from the highs. And we had a break right here, a little bit of break, two legs to a new low. And at the time, I was quite leery about of this break, because I wasn't really sure whether this is legit enough break, especially since the price is fitted right here. But it ended up being a break and two legs to a new extreme. So there's the trend line rules. After break of a trend line, there's going to be a retest of a new extreme. So we have a new low right here. We have a first entry short, pullback, second entry short. Second entry short failed right here, but this is a horrible setup because the second entry triggered below bullish bar, which is horrible, and it failed above bearish bar. And this is not what we want to see. We are reversing and we are going to be long, so we need to see bullish bar. So even though this is technically a second entry short that failed, there are two horrible signal bars on both fronts. So the legit failed second entry short happened on this bullish bar, and the reason why I like it, and some of you guys can actually tell if you've been watching my videos for quite some time, this is a reversal pattern. And that was my last video that I make. Reversal pattern is happening after break of a previous trend line and a new low. We need to wait for two failed attempts in the previous direction. So this was a downtrend. So first entry short, second entry short. The bears tried to sell the market two times and they failed. And the EMA is holding prices. Trend line is holding prices. We are at the key entry point. Nice bullish bar. First entry short, second entry short. This is a reversal pattern. It was a little bit tempting to skip this trade because I wasn't really sure whether this is a new clear break or not, but this is such a strong looking reversal pattern, and you can see how reliably it works, that I think this is a good trade to take. And while we are working up higher, I was waiting for break and a new low, but I was still I wasn't really willing to go long yet. I was only willing to go long at this reversal pattern, but not long yet because this looked fairly bearish. So we have a little bit downtrend working low, we have a break and a new low, and we're starting to go into this little bit of trading range. What I noticed is there are some clear highs forming, and you can see that you can definitely make a strong case for there being some resistance. You can see how the key level is happening here, and there's a multiple highs that cannot close above. So I used these highs. These were the highs that I used to find a trading range, this little tiny trading range. And we have a break and a new low. We have a lower high right here, higher low right here, excuse me, nice bullish reversal bar. But it was still a little bit scary to go long with being below EMA and after such a sell-off we had in the morning. So I think it was better to skip this trade. And as you can see, there's a trend line working up higher. Draw these short-term trend lines. They work after break of a trend line. There's most likely going to be a new extreme. But a lot of times in trading ranges, you will not get a new extreme. Just like it happened right here. You have a trend line working up lower, you have a break, and we didn't make it to a new low. So this is the thing with the small little trading ranges. Just today it happened perfectly. We have a break and a new low, we have a break and a new high. So it's happening quite well. But most of the times, once you are trading small little tight trading ranges, you will find out that you will not make a new extreme. And that is okay. It is because the prices at the support or at the resistance are too weak to make a new extreme. So the best way to trade these ranges is obviously to sell the highs, to buy the lows, but fading the breakouts is the winning strategy. And this is why I like this short so much. This is the first break higher above this key level. And as you can see, most breakouts will fail. You are quite a bit away from EMA. You have a break and a new high. And I was still expecting for prices to go lower after this point on. So this is a smaller trending. We're just going sideways. You can see EMA is flat in the middle of those bars. And this is the first failed break higher. And it failed. We turned back into the range. We bounced from the support. But this is a doji looking bar. We traded up back higher. You have a new low right here. First entry short, pull back, second entry short. But right now we are exactly at the resistance. So I thought it would be much better to give it a little bit more room. But with this one little push higher, this is the lower high of this high. And once again, another failed break higher. This is why these failed breakouts work so well. And you can see how it traded up back into the range. So this is how you trade these trending ranges. And as you can see, in this particular instance, you have a break, but you don't get a new high. You have an attempt to make a new high, which is, in this case, this is enough. Attempt to make a new high is enough because you are at the very high and the resistance is strong. There's a key level right here, a failed breakout. So you're not going to make a new high that quickly. So just bear that in mind, that trading these smaller trading ranges, the fading the breakouts is the best way to do it. But here was the thing that really changed the gears in today's price action, because notice how we didn't make it to the lower side of the trading range, and each time you're making higher lows each time. So at this particular time, and especially once we rallied up higher here, this is where I drew this trend line. And this is the reason why I'm not marking this failed break higher, because there's obviously something happening. Because market should have traded up lower and market should have sold off lower much more. But we are keep bouncing off to this trend line. So this failed break higher, now there is much more bullish power in the market. There's much more people willing to buy. So you don't know if you're going to make a little bit pullback and then continue going higher. So this is the time when you have to stop looking for failed breakouts, because eventually one of those breakouts will fail. And this is the indication how you will tell the breakouts will fail, that you will discover this trend line working up higher. And this trend line is fairly easy to discover. You have quadruple bounces of this trend line. You are making higher lows each time. So there's definitely indication that this is going to be probably an uptrend. Especially since we bounced right here and we didn't make it even to the support. We sort of bounced in the middle and reversed really up higher. This was the indication that I need to stop looking for these failed breakouts. I need to stop selling the markets, because the bulls are more prevalent and they're going to rally the market up higher. And you can see the failed breakout worked once again, but it is better to skip this. And unfortunately, you don't have a good setup right here, because you have a trend line working up lower. And if you had a break and attempt to make a new low and the trend line held, that would have been a great long. But this was a fairly strong move down, and you have to wait for a break and a new low according to our rules. So you just have to let the market go without you. And here's the thing, once again, here is going to be the breakout pullback pattern. There was a second entry long that we like according to our rules right here. Actually, looking back, it's just the first entry. I swear to God, I saw a second entry on my chart. One of these bars ticked a little bit higher. So I had a second entry long right here, but I didn't take this bar because you were going long exactly into these matching highs, into this double top right here. Look at all these matching highs. There's definitely some sort of resistance a little bit forming. So I skipped this trade and I didn't take this trade because you're going long right here. And this is the breakout pullback pattern that I want to talk about. Prices broke higher, pull back, and we pull back at the key entry point at the EMA. And this is the only time I'm willing to take the breakout pullback pattern. Once the breakout pullback is happening at the key entry point. If we weren't near the EMA here or the trend line, I wouldn't mark this trade. But this is a new high right here, first entry long, pullback, second entry long right here, two-legged pullback to the key entry point. This is according to our rules. So we broke this resistance, pulled back on it. Resistance is holding now as a support. EMA is holding as a support and a second entry long. It would have scared you a little bit, but it ended up working at the time. And here I'm going to show you, this was a few weeks ago, the breakout pullback pattern that I like, and this was a textbook breakout pullback pattern. I actually showed it to one of the traders that emailed me, so you know who you are, you're probably watching, and I showed you this pattern. So we have a congestion, tight little congestion working up here. You have a fell break lower, which is a good buying opportunity at the key entry point, and you can see how market broke higher. We broke this resistance and we pull back, just like the most breakouts will fail. We pull back, but the only reason why I like this breakout pullback, we tested the resistance that now acts as support, is because we are at the key entry point. We are at the EMA, we are at the trend line, and the market structure is definitely bullish, and we are looking to go long. So this is the only way why I like the breakout pullbacks patterns, because you never know if we are not at the key entry point, you don't know if the breakout pullback will end up as a pullback or it just failed breakout and you will trade it up lower like here. The only reason is that we are at the key entry point and we are with the trend going up higher. This is the only reason when you should be looking for breakout pullbacks, and obviously vice versa when going short. So a very similar pattern happened right here. You broke, you are at the key entry point, second entry long, a little bit of a breakout pullback. And you can see how we sold off a big time right here, and we went into the small tiny little congestion, this little consolidation. This is just undecisiveness. Nobody knows where the market is going to go at this point on, and this is the best way to trade this, is to skip this, sit on your hands, don't trade this, because at this point on we have a first break of this bigger trend line working up higher. So I was definitely looking for setups to go long, but you really didn't get one. You have a fell break higher, and you can see how the breakout fell once again. And I was quite caught off guard here. I was thinking, am I tripping? Are we not gonna get a new high of this uptrend working up higher? Because it really looked like we're gonna sell off here and go much lower. But once again we went into this consolidation that you have to skip. Small little bars stacked up next to each other. Definitely don't trade this, because it is tempting to go both longs and shorts. And since when it is tempting to go long and short at the same time, you're probably not analyzing the chart well, or the situation in the market is not so nice to us. So skip these congestions, fade the breakouts if it's in the right market structure. And it was quite tempting to fade this breakout because you was expecting a new low of this downtrend. But overall trend is up, and I was looking for a break and a new high, so I skipped this. And I think it's much better to skip this, because this downtrend is a small little part in this bigger uptrend, and this uptrend is very clear. So you have to put the X in the basket of this uptrend. And you can see how we read up through the EMA. We pull back a little bit here, and this was the last setup that I saw. You have this trend line working up lower. You have a break, attempt to make a new low. You actually make a little bit new low. I didn't notice that trading live. You have a new low right here just by one single take. You pull back. EMA is holding prices, big bullish reversal bar. The EMA is holding prices nicely. Overall, you're looking to go long on this bigger uptrend, because after a break there's most likely to be a retest of a new extreme. And here you have a legit reversal pattern. First entry short, second entry short that failed. Obviously this is way too big of a bar, and that is not according to our money management rules, so you would be skipping this. But just as a example case, failed second entry short at the EMA with the direction of a trend, so good opportunity to go long. And overall the day was fairly not easy to read early on, but once we made these lows, these touches right here, you could see that there's a trend forming and there's a breakout pullback pattern. And early on, just you have to fade these breakouts in a trading range. And it was actually very tempting to take this long as well, because you can see there's a double bottom right here, and this is starting to look like a trading range, especially with the break and new low right here, a lower high. You're coming off the support, so potentially a trade as well. I'm going to market. But I just like these shorts better because the left side of the chart was looking like we're gonna continue selling off. And this was very painful to sit through this and watch this, because nothing really happened here, and there's no setup here, so you just have to sit here. And I actually missed this trade. I put my limit order back in, and once the candle were trading up higher, I thought I was gonna miss the trades, so I canceled the order and I went away. And it actually, now that I see that it came back, and I would have gotten nicely filled and continue higher. But hey, what can you do? It doesn't really matter. So hopefully the breakout pullback is a little bit, you know, that doesn't make more sense to you. Excuse me, I'm kind of losing my voice today. I don't know what's going on here, but this was the perfect breakout pullback pattern. Let's take a look at this once more time. You have this tight little congestion working sideways, fell break lower, fell break higher, you pull back, and you're retesting the key entry point and the resistance that now acts as a support. This is what we want to see, and this is the breakout pullback pattern that you can actually trade, because most of the breakouts you want to stay away from and you want to be fading those. So hopefully you guys enjoyed the video. It was a little bit helpful. If you like the video, hit the like button, and I would appreciate it. And I'll see you guys in the next one. Bye guys.